Hey everyone, I am back in the good old USA, and does it feel good to be back or what? Nice familiar background, a microphone that I can actually see. I was paranoid the whole time that when I was doing my updates on the road that the sound would be terrible, and it sometimes was, but nonetheless, I'm back. And this week, I want to talk about where is the stock market? Where is the crypto market? And go backwards to something that I talked about in August of 2022, which is that how are you going to know when this bear market is over? And how do you know when a new bull market is beginning? But before I do that, I got to do my usual disclaimers. Let me grab that. A lot of practice on doing this. All right. Disclaimers. Number one, not whatever this video is, it's not investment advice. And that goes for all of the content that is made by my company, ATG Digital Media. Past performance does not equal future results. Errors, mistakes, oversights, they happen because we're human. Capital loss is a likely outcome. Listen, folks, there's risk in the markets. There always is going to be risk in the markets. That means you can lose your money. This is not a savings account. All right. Finally, I, the owners, contractors, employees, associates of ATG Digital Media, own, trade, transact in the investments that are mentioned in this video, in our model portfolios, in my tweets, in our Substacks, pretty much all of our content. All right. So one of the things of going away is that it kind of gives you a little bit of a big picture view of what's going on. And as anyone that's following growth stocks knows, I mean, we've had a massive surge in growth stock prices. The GBC 100, this is an index that I created. It's got 100 stocks. It focuses exclusively on our markets, so growth and innovation. So 100 stocks, because the S&P 500 is a pretty, I mean, it's so lopsidedly weighted towards Apple and Microsoft and Google Alphabet and essentially 10 companies that you could never know from looking at the S&P 500's moves as to what's going on in the growth and innovation sector. So the GBC 100 at its peak for 2023 hit some high of about 52% for 2023. That's right. Our index, the GBC 100, which if you want to keep track of it, you can subscribe to my Substack, paulmampilli.substack.com. I'll mention it again later. But the GBC 100, 52%, and it's dropped off now by about 10% since. So what is going on? Is that going to be the end of this, rally, or are we going to see a next run? Now, I was on Twitter sort of recuperating from the extraordinary jet lag that comes from traveling from Asia, from Southeast Asia. And, the thing is, folks, it's not a new bull market until we see new highs. In other words, we've got to travel back up to the highs that we saw in February of 2021 before you can really call it a bull market. So the folks that are calling it a bull market, remember, I'm talking about our stocks, growth and innovation and crypto. It's not a bull market until you see a new high. And why is that? Well, the way that market theory, if you will, based on sort of really all of these books, and the best books are really from when the markets first began, because you had none of this mumbo jumbo. It was really purely driven by market mechanics and psychology, and where traders can look at each other in the eye and sort of really make these deals. And this is where their principles come from. So the idea is that when a new buyer is willing to come in and pay a new high price, it means that they see something in the stock, in the crypto, that was not easily seen, not easily understood, and certainly something that no one wanted to act on, but they are willing to act on it today. So that means we've got really quite some ways to go. And it is unlikely to be like a straight line up. the first recovery after sort of like, a big, I'm going to call it like a bottom, is a spike up. And after that, we are going to see like a sawtooth action movement. And again, I'm talking about our stocks. I'm not talking about the S&P 500. I'm talking about our stocks. And the best proxy for our stocks, in my opinion, my judgment, is to follow the GBC 100 through my Substack. And so we've gone up 50% for 2023, which is obviously a big number. The S&P 500, in contrast, I believe, is up something like 14, 15%. So almost a 3x. So that tells you by itself that we've got the makings of a new bull market, or makings of a new bull market, but no bull market yet, because of the fact that the vast majority of our stocks are still down 50, 60, even 70%. Heck, there's stocks that are still down 80%. So we've got some ways to go before you can really call this a bull market. And so many of you be thinking, well, Paul, what should I do? Maybe I should sell everything because, everything crashed last year. Personally, for me, based on my years of experience, and remember, I've been in markets for 20, 25, closing in on 30 years. I know it's hard to believe, 30 years. This is the accumulation period. This is the accumulation period. While it's very difficult to buy 50% off the bottom, really the place to look at is those old highs. And those old highs are going to be taken out. And when those old highs are taken out, the current prices that you're seeing are going to look very, very low. So it's very difficult psychologically to go in and say like, oh, I'm going to buy XYZ stock 50% off the bottom or 70% off the bottom. And you know what? You give it a few more months, a number of them will be 100% off the bottom. And then soon you'll be coming up to those new highs. Now, if my sense and feel is right about what is going on, which is that our stocks and crypto started crashing down, started being just sold down, shorted, manipulated down, all of the above, if you will, primarily because of sort of like, there were three theories, and all of them have been absolutely debunked. One was the inflation theory, and under the inflation theory, it is that future cash flows are worth less than present cash flows when inflation is rising. And so that would make innovation companies and growth companies, where their peak profits are well out in the future, those would be worth less in the present. So sell them, short them. Debunked. Truflation, which is a real-time blockchain-based indicator. Inflation says that inflation right now is about 2.4%. There was a low point, I think it was a week ago, when it was, I think, at 2.1. But nonetheless, the trend on inflation is down. It's deeply down. So the inflation theory, debunked and gone. The other theory, which was that we were experiencing a 1999, 2000 styled dot-com tech stock bubble that was particular to our stocks, growth and innovation stocks, and that these companies had no sales, had no chance at profits, and hence they would go to zero. Now, that class of so-called innovation stocks were terrible. I mean, they were so bad that the NASDAQ exchange actually wiped off all record of it. But our stocks are still trading. I mean, you go check them, and they are growing. Some of them by as much as 50, 70, even 100%. I mean, because they have actual real technologies, actual real products and services. So theory number two, yeah, fail, utter fail. Not a 1999, 2000 tech.com bubble scenario. The third one that people also claimed was the reason to sell our stocks, short our stocks, trash our stocks, was that we were going to have another 2008 style, crash, recession, and that would just, take all of the sales down and cause like a panic. Now, we definitely had a panic in our stocks, but the sales have continued to go up for the vast majority of our companies. I mean, they continue to produce at minimum 8 to 10%. Like I said, 50%. So that's scenario number 3 debunked. In other words, people have been betting on hyperinflation, debunked, a tech bubble, debunked, a 2008 style replay. In other words, people have gone back essentially to like the largest 3 big economic events and said a replay was going to happen, and none of that happened. Shockingly, despite the Federal Reserve increasing interest rates from essentially 0 to almost 6%, the economy continues to grow, employment continues to stay incredibly high, inflation is coming down, and there's no real sign of extraordinary financial distress, economic distress yet. So under this scenario, I have said, listen, at some point in time, the Federal Reserve is going to be done. And if the Federal Reserve starts to ease interest rates or even stops raising interest rates and inflation keeps going down, you are going to have very high real rates. Real rates are where, you take, the interest rate, which is, let's say 6%, and you subtract out inflation. Just for the sake of this video, let's say it's 2%. Then you get to 4%. 4% is a very high number. And I can tell you that when you go through the vast majority of legacy, old, mature companies, they don't grow by 4%. It is not worth investing in them. But with the market active, with people wanting to own stocks, what does grow faster than 4%? Well, it's our stocks. It's growth and innovation stocks. They're growing by, like I said, a minimum of 8 to 10%, some by 50, some by 100. So I'm expecting over the next 12 months, as it becomes closer to the Fed first stopping raising interest rates, then as the economy inevitably slows down, and it will at some point in time where you see a significant enough slowdown that the Federal Reserve is going to want to cut, you are going to see just more and more money push into both growth stocks and crypto, because the demand scenario for crypto and what they represent is also similar to growth. You are just going to see a massive, massive, massive move up. So we've got, I believe, on the low side, 6 months, mid side, I'd say 12 months, 18 months before we're back to the old highs. And that's when the new bull market begins. So hang in there. It's not going to be a completely smooth ride. It is going to be up and down. But I believe somewhere in the next 6 to 12 months, we are going to see many of our stocks approach their old highs and then start to take them out. And that will be really incredible. Nobody would have imagined it. People would think it miraculous. And if you hung in there, you would have made an extraordinary, extraordinary amount of money, especially if you were able to buy into some of the low prices that we had in 2022 and even earlier this year. All right, that's my update video for this week. Before I go, quick plug for ATG Digital Media, which is my company. That's the website, ATG Digital Media. We have paid subscriptions that begin at $9.99. We cover innovation, growth stocks, and crypto, provide stock picks, crypto picks, updates, market strategy, commentary. And also, as I mentioned, you can sort of check us out on my Substack, which is paulmampilli.substack.com. Just give me a moment here, because this very, very important piece of paper fell down. All right, thanks for watching. Come back next week. This is Paul saying bye.